Hello, everybody. Welcome to a brand new series of the Game of Loans podcast, series 2, and a massive welcome back to the head honcho of social housing. I think it's fair to say, Jack Wicks. Jack, how you doing, buddy? Good to have you back on the show.
Thank you, mate. Really appreciate it.
No, good to have you back, Jack, as I said. And as we were talking about off air, we have had you on the show before, but I was really eager to get you back on because since we last spoke, you've really sort of niched down into what I think is a huge area of growth within the property investment sector, which is working with social housing providers. And so I guess, obviously, for those that haven't listened to the first episode, I wanted to give you first the opportunity to introduce yourself again, but also, I guess, to say, I've got you on here because we need to talk social housing, man. It's huge, isn't it?
It's 100% huge, yeah. And you keep nicking all the content from me. So, yeah. So I've been in property 10 years now, the big decade, and I've done everything. Rent to rent was my kind of first success, I suppose you'd call it. I've done blocks of flats, title splits, lease options, all sorts, and sort of in the last 2 years, it has been social housing purely on the back of, the consistency of it. So for those that don't know, brief overview, social housing is anything from asylum seekers to homelessness to it could even be supported living and those with sort of very specific needs. And what you get for that as a landlord is almost an FRI lease, which you get with commercial property. So fully insuring and repairing lease. And what I liked about it is in property, there's so many things that can go wrong, so many things that could add cost. And when you're working out your deals, you end up guessing and averaging over a year and hope that it doesn't get worse with maintenance and management and all that sort of stuff. At the moment, we're dealing with massive hike in energy costs. That's going to hit HMO landlords really hard and completely unexpected. And they can't just go and put that on the tenants because they simply just won't pay it. So when we found out about this model, it was straight away, this is the dream. So, we can go and get a property knowing exactly what we're going to get in terms of rent, and that will be net rent every single year. And we know that we're going to be able to scale because there's no management element of it that we need to get involved in. There's no maintenance team we need to build in each area. And ultimately, it's not all about the money. And again, talking about, in these sort of times, you've got, the whole thing in Afghanistan. You've got most recently Ukrainians trying to flee their country. And actually, as a property investor, it's quite nice to do something sort of notable and trying to sort of help. As much as there are benefits in the financial part of it, it's actually quite nice to deal with stuff that's actually helping people that need it. Rather than, fairly well-to-do students, for instance, or, professional people that are doing well and you're just charging them a rent. You're helping people have a house and feel safe for their families, which is a pretty cool thing to be involved in.
Yeah, do you know, it's funny because I've obviously, both of us have been working in this sector for quite some time in terms of just property in general. And one thing that kind of annoys me, and I don't know if you have the same thing, because I was talking to someone the other day and I was saying it's funny how when you are in this lifestyle of what I would call like the 1% lifestyle, where you are looking to be successful, looking to improve yourself, you kind of forget that the 99% lifestyle exists. And so like a couple of weeks ago, I went to Twickenham to watch the rugby, and I was with a load of people that they're really great people, but they're just 9-to-5ers. They just go and have a job. And you mentioned some of the stuff that you do. So I was talking to them about some of the clients that I have and some of the, the properties they own, their big portfolios, and their instant reaction is, just money grabbing, the fat cat landlord idea. And I said to them, look, I don't want to get into it because now's not the time. We're here to have a beer and watch a bit of rugby, but actually, you'll be surprised that stereotype is just so old-fashioned and so irrelevant because so many landlords actually take such a great amount of pride in knowing that they are housing people and they want to create a really nice living environment for people to reside in. And I think, going into the social housing sector just basically takes that to the next level, doesn't it?
Yeah, 100%. Yeah, I mean, you get that with it. Any business that means you make more money than somebody else, there must be something you're doing. And people. I think people in general, and this is another debate entirely, but people genuinely think that if you have wealth, that means you've taken it from somebody who doesn't have wealth. It's like it's not that one directional. It doesn't mean that that the owner of Netflix isn't like making you skint and taking food off your table. You're openly paying him for a service that you clearly appreciate and value. And it's no different in property, really. Obviously, you get people that are kind of house hoarders, you could call them. But someone's got to own them. And it doesn't really matter if it's one person or 100,000 people. It's irrelevant to anybody else, as long as they are creating a good home and they're looking after their tenants, because that's half of it. Is there are rogue landlords out there, and there are a lot of shit landlords that don't look after their tenants.
Yeah.
But again, they're probably the 1% out of the industry.
Do you know, not to go off on too much of a tangent on this, but this reminds me of, and so I'm old fashioned. I quite like going on Twitter quite a lot because I like just watching conversations happen. And I remember probably about a year ago now, and I try to not get involved, but sometimes I just can't help myself. There was like this Twitter conversation going on, and to be honest, they were a bunch of twits as well. They basically were debating the fact that they think that all private landlords should be made to give up all of their property so that it freed up stock for first-time buyers to buy. And I just thought, please don't tell me this is like a popularist thought, because that is just literally the stupidest thing that I think I've come across in such a long time. But yeah. I tried not to get involved. I dived in like an idiot, and I pulled myself back out of it pretty quickly when I realized it was just pointless. But I just couldn't understand how anyone can think that in the real world actually works. Landlords are creating homes for people. We don't have enough homes in this country, and the private rental sector is the easiest way to ensure that every person that needs it has a home. In the UK, it's as simple as that.
Yeah. And again, like you say, it's a very in-depth conversation, and it's like these are the same people that complain about the government and the councils aren't doing enough. So you're saying if there's no private landlords, then all of it will be owned by the councils, and you've probably said that they can't do their job right. It's like none of it makes sense, and people just like to moan at people who have money or seemingly have money, because the other thing is most landlords would really struggle if they didn't get their monthly rent payment. And people don't seem to realize that either. When they go and just don't pay for a couple of months and find it hilarious, that could be someone who inherited that property and actually rely on the income from that. You just never know with these things. It's never as straightforward as people seem to think. Otherwise, it would be fixed.
Mm-hmm. Yeah, it's a tricky thing, because I guess like anything, like you said at the beginning, if somebody has something that you don't, the mindset just seems to be, well, they've got there by some kind of illegal or slightly naughty means, which is ridiculous. But
your daddy's money is the favorite one.
Oh yeah, absolutely.
That's your TikTok go-to. Anyone who's successful, their dad gave it to them, or this, that, and the other. There's always a reason why. Couldn't possibly be the hard work and risk and blood, sweat, and tears.
Absolutely. No, it's do you know, I was actually listening to another podcast yesterday, and it was talking about that risk that people take to become entrepreneurs. And actually somebody made a really good point on there, that with all of the stuff that's going on in government at the moment, I know we're going on a bit of a tangent. We definitely need to get back to talking about social housing, but what was a really, really good point on this was that with everything that's going on, with particularly, stuff against landlords, making it more difficult to be a landlord and make money out of it, more difficult just to be a business owner in general, the corporation tax going up, all this kind of stuff, it's actually making it almost more risky to become a business owner. And the point that the person on the podcast made, which I kind of shared after I heard it, was it's actually quite dangerous, because this country, like many Western countries, is really held up by having a core group of people that are really creative business people and entrepreneurs, that because at the end of the day, business people create jobs, and landlords, what people don't even realize is nowadays landlords, they create jobs for people, because loads of landlords employ PAs, they employ building staff, they employ some of them, I even got clients that have started their own lettings agents because they own so many properties. They're employing people, they're creating jobs, and And ultimately, that's how Western economies work, is that there is money being flowing from somebody that understands how to create the service that someone wants to provide, and scratching that itch, and then feeding that money back into the community by way of employing people to ensure that service holds up. I mean, that's where the term currency come from. It's the current, the flow of money from one person to another, and that's it in a nutshell. So I'll get off my high horse on it now, my soapbox.
I think look, like, I have to listen to my dad every single day moan and bitch about everything you can imagine, and I always just say to him, "Are you going to go and sort it out? Are you going to get in your car now and you're going to go and figure that out and you're going to sort it out? Because if you're not, then stop bitching and moaning about it and focus on your life. Have a chat with me and a beer or something and just relax. Because if you're that pressed about something, go and do something about it. If you're not, then sit there in silence and stop. It doesn't help anyone. It's one of those things. It's like these people that moan about the business people that are doing well, etc. And go and do it yourself then. That's part of it. I think with most people that bitch and moan about other people that have things, it's because they know they can't actually be asked to even try. And therefore I'd like to just bitch and moan about you because I know that I'm sort of inwardly frustrated with myself.
Absolutely. No, I couldn't agree more. But look, before we head on too far of a tangent, I do want to bring it back to talking about the social housing side of things. Obviously, this is the core of what we want to talk about today. So for those that, obviously you went into a little bit of detail at the beginning. I mean, I'm interested to know the process from, in terms of what I get asked a lot is, how do you actually get to the point where you can rent a property out through a social housing provider? Like, how does that process even come about? Obviously you are very well versed in that. So if you wouldn't mind sharing sort of, I guess, your process of actually doing that, because I'm sure there's going to be a lot of people listening to this that are probably listening in purely because they might want to actually come and say to you, Jack, can you help me with this?
Yeah, it's been a long slog, to be honest. And it's never, people are always like, well, if it's that easy, why doesn't everyone do it? And it's just not easy, basically. To get the benefits that you get from social housing, you have to jump through a lot of hoops. This is, in some cases, government-backed money. It's for people that really truly need it, and properties need to be done to the certain level that they require, quite rightly. But it is painful sometimes. They're very archaic processes you have to deal with here. And we learned that over the last 2 years that we've done this. And we've got it down to a fine art, nothing to do with me, by the way. That's systems and process driven stuff, and getting the right build teams that know exactly what they want. But I suppose the question's multifaceted. Great word. Not to be confused with, what's the other word that's phallicid? Phallus. Not such a nice word.
I'm redoing my English GCSE at the moment, mate. Keep coming.
And because obviously what most people want to know is, how do I go and get a lease on my property? And it's just not that simple. Quite rightly and understandably, most social housing providers are protective, and they won't just put their details out everywhere, because what they don't want is everyone and every man and their dog just turning up and going, can you take this house? Can you take this house? They just cannot. They don't have enough staff or resource to be able to deal with that. So what they look for is big companies who are doing lots of properties, or big landlords that are buying lots of properties, and they're getting the properties done to the right level, and therefore making their life easier. And that's where we've been lucky enough to be involved in. And from there, you kind of start to build your sort of core social housing providers. Really, you've got the obvious ones, which I don't mind saying on here. It's like Serco. Everybody, if you type in social housing, it's going to come up with Serco, and they're great. They don't pay very well, but they are one of the most solid social housing contracts you can get. They're quite anal with the refurb, but again, once the refurb's done, they're brilliant. They'll take that on for 10 years. You've got a lot of smaller ones. You call them sort of boutique social housing providers. They're the ones I really like, because they're very specific on who you're helping. So it might be like, we need 4 houses in this part of Leeds for a family that's going through this, or something like that. They're always pretty cool. But again, that comes with just being in the industry. So something I've kind of realized, having been in property for 10 years, is it's not all that much fun once you've done it for a little while. There's a lot of it that's shit. There's a lot of stakeholders involved in the process. So actually, and this is honestly not me trying to sell my service. You can take it or leave it. But if I wanted to do it again, I'd just be going and getting someone who does it and paying them to do it, because the amount of money you will lose with social housing by getting that refurb wrong, because they're not fast to come out again and do another check. It could be months down the line before you get that remedied and then rechecked and signed off. They give you 6 months to get this stuff signed off as well. So if you're delayed on your refurb, they could turn around and say, well, that's it, we don't want it anymore. In most cases, they're not that harsh, and they'll just extend another 6 months. But you have to be wary of that stuff. And I think people go into this naively thinking, oh, I'm just going to put this lease in place and I'm going to get all this money. Lovely. But there's a lot of process in the background that is well worth making sure that you know.
Yeah, it's, do you know what, you just saying that there, and I think I actually really commend your honesty, because I think the problem that I have a little bit with the property sector actually is that there's almost like a pressure that you have to be absolutely in love with being a property investor.
Yeah,
you got to eat, sleep, drink, whatever, property all the time, and you've got to love every part of it. Do you know what though, mate? The best investors that I work with are just amazing at being the conductor of the orchestra. Just sitting back, they do very little. They'll use property sources, they'll use they'll use agents, they'll use management agents, basically everything that needs to get done throughout the process. They'll use virtual assistants to help them with, finding sites or finding properties. They'll literally farm out every single facet of it. Yes, they will not make as much money as somebody that is doing all of that stuff themselves, but then it's a time money balance. And this kind of brings it on to a big question I was going to ask you about this, because I know my own opinion of it. Is renting your property through a social housing provider the closest thing to true passive income there is as a property investor?
I believe so. Depending on the contract and the provider, yes. Again, there's obviously upfront work unless you get someone else to do it. But that's as a business, and myself and my business partner, that is what we focused on, is what upfront work can we do to then give us, passive, stress-free, predictable. That's a big word for us with property, is the predictability of income. People can go and get service accommodation units and they'll tell you it's passive until the cows come home. It's fucking not. It's far from it. And equally, it is certainly not predictable. 1 month you could just wash your face. The next you're running around buying a Ferrari. It's completely. And people are like, well, I just average it over the. You don't average it over the months. You go and spend every penny when it comes in. Let's be honest. But I like that you can get a fixed term mortgage. You can get a fixed income that is net, because they deal with all the problems. It just helps you sleep at night, knowing that, like I say, not only are you looking after people and you're giving them, comfort and safety in a house, but you're also getting a predictable income that means you can, live your life and know what's coming in and what's going out.
Yeah, and I think this is. I mean, I agree with you wholeheartedly, and I'm really glad that you agreed. You said yes, because otherwise we'd be having a different conversation right now. But because I genuinely do, and because I get to see, I'm quite fortunate in my position. I get to see across the whole spectrum of different sort of investment strategies, and this is by far the one that, I mean, the clients that I speak to that do this, they are genuinely the most chilled. I'm not joking. They really are, because they're not. There's a whole part of being a property investor that's just removed from the equation. All the stuff you've mentioned, you're not worrying about the upkeep of the property. You're not worrying about tenants moving out last minute or whatever, because you've signed up to, as you say, potentially a 10-year lease with someone like Serco. But then what always amazes me as well, though, is when I speak to people that are relatively new to it, and you probably have the same thing, because obviously you've got people coming to you saying, Jack, please help me find these properties, is that they're really keen to have that passive element, but they're not comfortable with the fact that maybe they might not actually physically earn as much money. Because as we know through our discussions, through us working together, me arranging the mortgages, they're not necessarily as cheap as if you just go, down the road to your standard buy-to-let lender. It is going to cost a little bit more, which may eat into the cash flow. But so you've got to find that balance. You can't have everything. You've got to either go for something that's more passive or something that might not make you as much money, or something where you put a bit more time into it and it might make you a little bit more, such as something like service accommodation.
Yeah, and everything has its place. If you're just starting out and you need to maximize, you've got 10 grand, let's say, go and get a couple of SAs and put a lot of graft into them and get really good cash flow out of them. Equally, if you're a little bit more, I don't know what the word would be, bored of the issues that come across in property and dealing with property in general, and actually you're looking at it as an investment, not a business, which I've kind of got to a point where I'm just like, property should be considered an asset class and not, it's not so much a business. You can have property businesses which use property, but equally I think if you use it as just an investment class, then I think it makes total sense to go down the route of something like this that avoids, because people who aren't so wet behind the ears don't realize the stress of a non-paying tenant, or having to go to court to kick them out, or having to pay for a refurb that was only done a year ago and has been absolutely trashed by someone. Like, all of that stuff really takes a toll, and it is way more common than most people think. People think, oh, I'll just go get a nice single let for a lovely little family. And it's like that. The reality of that being the case is small. So I think you almost, without having the heartache and the pain of having dealt with those issues, you would always go along with, well, why would I go social housing when I can get more with a single let or an SA or something else? But once you've been through it and you realize how painful that process is, the social housing is just a no-brainer. And we've kind of taken it a step further by using rent to rent as a strategy as well, which helps us maximize our money. So weirdly, I had a 18 HMOs that we ran as rent to rents, and we got rid of them because of the stress, because of the hassle. Every month waiting for a boiler to go and have to deal with that, or waiting for tenants just to leave, or all 6 of them to leave at the same time because they're all friends now and they'll just go and rent something together. It's like you're always just kind of, when you're at full occupancy, you're there on the edge of your seat going, what's going to happen here? What's happening? So we got rid of it, and a couple of months later, we were back into rent to rent, heavily doing social housing, and we've done about, I think, 26 now in just over a year. We've taken on ourselves, and we continue to source them for investors now as well. So it's again, with rent to rent, people look at it and go, well, if you have one void, you've wiped your profit. With this, we don't have that. It's almost a rent to rent, I suppose you could call it, because we're then just leasing it rather than individual tenants. We're leasing it out to the provider, who give us a set amount.
Yeah, and what? I'll be honest. This is where I get really annoyed with mortgage lenders because as you and I have just talked about many a time, the mortgage industry just isn't up to speed with this just yet. It really isn't, and it is, but it's slow. And this is what frustrates me the most, is that when you actually boil down to exactly what's going on, and if you ask a mortgage lender why they wouldn't lend on a property that's rented to, say, a social housing provider like Serco, for example, is they'll always quote reputational risk. So what a lender doesn't want to do is they don't want to be seen to be kicking out, in inverted commas, vulnerable people if the senior landlord, let's call them, doesn't keep up repayments on their mortgage, and then they have to repossess. And I go through the process with them and I say, like, right, okay, let's just destroy this argument for you once and for all, which is, right, let's start from the bottom and work our way up. Actually, no, let's start at the top and work our way down. It's easier that way. So your senior landlord, i.e. your borrower, what are the chances of them defaulting on a loan that they're getting a guaranteed rent for 10 years? Very, very low, much lower than the average. So that's one thing that I just go, look, guys, if you're happy to lend to somebody that's renting on a 6-bedroom HMO that probably for most of the year will not be at full occupancy,
take the money direct. My thought process on it, to just like jump in at that stage, is take the money from the housing association directly. Yeah. Why isn't that an option? Take your percentage from them. The rest,
guarantee is it's admin. I guarantee you it's admin. They just can't get their head around it.
And the other thing about it being like reputational, like, how about good reputation? How about you create a product specifically for it, and you're going to be all over the news as the lender who is helping landlords house those who are in need of accommodation.
I need you to
rather
be
than the ones
my
that
next
have
call.
it's
My
like,
next call to lenders, I'm signing you up as my right hand man to assist with
go.
this. These are the things I say to them. I'm telling lenders all the time, you need to create a product for this, because I say to people all the time, social housing from a mortgage perspective is not a product type. It's not an HMO product. It's not a service accommodation product. It is a criteria point. Some lenders will just be happy to lend on these types of leases. But from the reputational risk point of view, you're absolutely spot on. In fact, that's something I haven't really thought about in terms of the positive reputation that a lender can create. They're always looking at downside risk. That's just banking in general, which I do understand. And they're concerned that they are going to be seen to be throwing out vulnerable people onto the street. And I say to them, you're not. I said, do you really think you are you're going to be taking the property away from Jack, for example, who doesn't keep up repayments on his mortgage? Of course you do, Jack, don't worry. But then you're going to implement a break clause with Serco, and Serco are going to go, okay, cool, no worries at all. And they pick those people up and they put them into another property. You are not putting anyone on the street at all.
Well, the other point in that is you don't have to kick them out at all. If they're going to then have to put that property on an auction, for instance, the property is going to sell pretty fucking well with a guaranteed tenant with 6 years left on a contract.
Yeah.
So I don't see that the relevant the idea that that will be the first point of call to chuck them all out is just odd to me. I just think
but that's because it's just all the way. It's just the way it's always been. That's lending. That's what welcome. You're getting an insight into the frustrations that I have quite a lot, Jack. Is that even I talk to clients about service accommodation all the time, and they're like, what's the mortgage market like? I said, it's the Wild West. It's all over the shop. They can't even decide what they want to call it. Some lenders are calling it holiday let. Some lenders are calling it short term let. And it will.
This is why, though, for me, property is just ridiculous. It's like it's so nonsensical. It's like the social housing for me, specifically based on a good lease. Of course, there are crap ones, by the way. On a good social housing lease, there's no reason why the lending shouldn't be the cheapest. They shouldn't give you the biggest loan to value, and they shouldn't be giving you a commercial valuation on the basis of the contract that you have. And if they did that, they would absolutely fly because bearing in mind these guys are desperate to lend money outright, and they're fighting against everyone else, and the only option, it seems, is to be the lowest on a rate. Then just do something like this that is niche, and it is growing in popularity, and it is doing a good thing for people that really need it. So give investors the best opportunity to build that portfolio.
Do you know what it is? I mean, I know through spending a lot of time with lenders that a lot of it actually comes down to the funding lines that they have, and what a lot of people don't realize. Even professional investors sometimes don't even know that 90% of lenders in this country are not lending their own money. There's a very, very good reason. Let me say this: that the government bailed out RBS about 12 or 13 years ago, because if RBS went south, our lending market would have probably collapsed, because a lot of lending in this country originates from RBS and one or two other similar banks. And so it's the funding lines that aren't comfortable with it. So it's actually getting the funding lines right with it so that we can then implement policy at a lender level, and not wanting to get too technical about it. But that's basically kind of how that works. So it is difficult. And one of the best things about our lending market in the UK is also one of the worst. The best is that it's probably one of the most secure, if not the most secure lending market in the world. And that is something to be really proud of and be very to be commended. But at the same time, it does mean it's quite slow, and it does mean that anything that is a little bit outside of the norm is quite difficult to get across. You go over to America, you sign your name Mickey Mouse at the bottom of a mortgage application, and they'll give you the money yesterday.
That's what we need. That's what we need, Sam.
But then we had 12 years ago we had
catastrophic
a catastrophic economic collapse of the Western world. So it swings and roundabouts. It depends what you're into.
Yeah, it's again it's the pace element for me. Kills me every time. It's mad. There's just so many stakeholders involved in these things, and they're just, in my opinion, doesn't really need to be. So I'm looking forward to the time when maybe crypto or NFTs can come into the property space and revolutionize that in the form of smart contracts or whatever that may be, a way in which we can because it's crazy. Like, I mean, I'm selling a property we bought a year ago. The same solicitor got it for us from an auction. So she's done all of her inquiries. She's got the answers to them. I'm now being asked the same questions, and she's asking me to fill out forms that relate to the same shit that we had to ask for. So she's got it on file, but I'm then getting asked, and it takes her 3 days to do that email. And it's like, this just shouldn't be happening. Whereas if there's a smart contract element, the property will have all that information on there, and it's only anything outside of that that may be new based on what we've done or haven't done that would then come up. Yeah, I'm excited about how close it feels that we are to that. As much as I'm kind of thinking we're still really far away, it's, at least it will be in my lifetime.
Yeah, I get really excited by this as well, actually. It depends on what day of the week it is. Like some days I'm like, we are close to this. We are really close. But then on other days I'm like, actually, are we? It's because it's one of those things. It's when we have a market that is as complex as ours, our housing market, in terms of all the different tiny little facets of a process that need to be sorted, you have to have pretty much everyone signing up to this, which is why lending is so difficult. When you want to be doing a lot of these changes, you kind of have to have all the banks to sign up to it for it to kind of work and for it to become the norm, which takes time. But
unless you use obviously decentralized finance, which is then another kettle of fish entirely.
Oh yeah, this is the thing. I mean, I think so. On the smart contract thing, I'm certain I saw something that the first smart contract was used for a property transaction in Australia a couple of weeks ago.
In America, actually. I can't remember what they're called.
Nuts.
Proppy, they're called.
Yeah, which is great. And the thing is, and this is why I said I'm not surprised that these things are happening in Australia and America, where actually Australia have got quite a good lending market. I think their model's brilliant. Actually, you basically all the banks have to use the same application form, which is like,
oh wow,
which is really cool. As far as I'm aware, I've had a couple of people tell me this, but then in America, like I said, their system is quite quick anyway. You can conceivably do a property flip in America probably within a month. You could buy it, renovate it, and sell it probably within a month in America. That's the genuine truth. We can't physically do that in the UK. So that's my concern, is that we might get left behind a little bit where other countries are implementing these sorts of things. You'll see it happen in other countries, like Dubai or whatever, I reckon, at some point. And then I just don't want the UK to get left behind with this kind of stuff, because it's actually really exciting. And there's like I said, there's as much infrastructure, technology, and everything that's required in the UK to make these things really normal really quickly. But it's just getting, the idiots at the top. And I'm not being horrible to politicians. I'm sure there's some really nice people out there, but sometimes you do just think, God, why you're not going all in on this kind of stuff? It's nuts. Yeah. You can revolutionize our country. We've already got, in my opinion, one of the best commodities there is in the world, which is property in the UK. Property in the UK is coveted internationally as a commodity, and why not use that to our advantage? It's and create a system where it becomes even easier to buy it. And then with the profits that you're making from it, put all of that into making more of it. It's just, for me, it's as simple as that. And there's so much room to build it. We're just slow at doing it because the government don't have the infrastructure to do it, unfortunately. But then we can put money into the rental market, put money into social housing and that kind of stuff. So we're making sure that everyone in our country is homed to a good standard, whilst also creating a commodity that can be sold internationally to bring millions, if not billions, of revenue into our economy. Maybe I just don't know enough about this shit, and I'm just thinking it's really simple. But for me, it's really
you need to get up there, mate.
I'm not getting back in the shirt and tie for no one.
You've got the Borises about you, mate. You can get in there.
Oh, thanks, mate. I mean, I have quite a bit of weight recently, but there's no point taking the piss. Come on, man. Oh man, no, it's a strange new world, but an exciting one. That I think we're heading into. And I mean, I was at an event where D Ludlow did a presentation recently, and it's funny actually. It was a property event, and everyone kind of left, and you could see there was some people that were just kind of like, don't like the look of that, because I do actually think, ironically, property people can be a little bit kind of not backwards. I don't want to use that terminology, but a little bit, they're not necessarily as forward thinking as others. And then you saw some people walking out of that event going, man, that was one of the most exciting things I've been hearing about in ages. You know, the use. I mean, he was talking about smart contracts and stuff like that. It's just incredible. The possibilities of this are endless. You know, it's a incredible new world that we're heading into.
100%. Yeah. And I'm trying my best to kind of understand it and see where we might be able to sort of lead on it. But we shall see.
Yeah, I know. But look, one other thing that I wanted to have a chat with you about is you know, I'm a great fan of sort of multiple streams of income, and I talk to people a lot about, especially in property, some of the people that are most successful that I've worked with over the years have another string to their bow, or several other strings to their bow. They might have some sort of business, some sort of income stream that's coming their way that they can actually use to filter profits into building a property portfolio. And, you know, I'll be honest, you know, I've been very, very open with the fact that that's what Grand Union Finance, my company, is, you know, in this scenario. You've been talking a lot, and I know you've set up like a separate Instagram, just talking about selling on Amazon and creating a business there. So I know that you mentioned a little bit about the fact it's kind of a bit of a family affair, this project. Was that kind of your thought process behind it? Was that actually it can generate some non-property related income that could potentially filter into reinvesting into property or into other assets? Is that what you were kind of thinking in terms of planning this?
Yeah, not so much, not so deep, really. No, I mean, my wife's just sort of starting her own business. She's a graphic designer and a sort of a rebrander, I suppose you'd call it. And those
I like that. She should use that if she doesn't already.
rebrander.
That's wicked. I like that. Yeah.
And so naturally, those things, especially going from corporate world to starting a business from scratch like that, those things are slow to build up. You know, building a client base and stuff. So I've been speaking to a guy who's he's just turned 21 and he's absolutely killing it in his Amazon business. So I said, why don't we have a go at this ourselves? And it's actually a really cool business model. Like I said, there's so many stakeholders involved in property, and there's so much delay with Amazon FBA, which is fulfilled by Amazon, where they send it out and all the rest of it. You find products that exist, you negotiate a good price on it, you send it in, and that's your job done. It might be a bit of price changing, but ultimately you refresh your Amazon page and you've got money sat there, and they deal with the customer service, and they deal, you know, there's no clients, no sales, no nothing, no marketing budget. So it's you know, it's relatively straightforward to earn 1-2K a month with it. So we're kind of using it as our fun money pot. So, you know, holidays, nights out, meals out, family days, that sort of thing. So we can just, you know, do this little business together. All it takes, you obviously order your product that you found, you get it there, you get your label printer out and relabel everything, send it off the next day, and that's your job done. And then that's, you know, holiday done. And you don't have to sort of think about where should we go, what should we do. It's like that goes from that account, separate, sorted. So yeah, it's doesn't take a lot of time, and it's just something we thought we'd give a go. And it's just nice, like you say, to have a business that is non-property, and it's so quick to set up, it's so quick to learn the basics, and you can again, like anything, you can go pretty deep into it and start doing white label products and all that sort of stuff. But yeah,
I guess if you want to scale a big business, and I know I tagged you into something that Simon Squid put on his Instagram about.
Funny enough.
Yeah, I did. You know, I know that you know, he was talking about Amazon FBA, saying, well, you're not a true entrepreneur if you build this type of business, but actually maybe sometimes that's not what you're aiming to do, right? You're just aiming to create, like you said, a little bit of fun money. And if you look at it, you know, I'm a great believer in starting with the end in mind. And if that's what you're planning on getting to, then that's all you need to do, right? You just do the basics to get something set up, and yeah, you can start seeing that fun money come in.
Well, that's it, and I think you can term anything, and the word entrepreneur. What does it mean? Am I a businessman? Am I what? It doesn't really fucking matter. As long as you live the lifestyle, you're happy, and you have time to do what you want to do, and the money to do that, then it doesn't matter what you call it. Ultimately, I would say the opposite, that Amazon FBA is probably the ultimate entrepreneurial venture. It is I'm going to negotiate a price below what is being sold on another platform, and I'm going to sell it for a profit. That is like Del Boy levels of entrepreneurship. You can bundle certain things together and create an entirely new product that someone will buy just because they can't be asked to buy the individual components of what you've created in a package. Like, there's loads of cool things you can do with it. So yeah, I don't know.
No, I tend to agree with you, and I kind of that's pretty much what I said in response to that message from Simon when he put that up. I think I did actually reply to his original post, kind of saying that, well, actually, you're creating a service, you're spotting an opportunity to bring something from over on this side to somebody over on the other side that maybe didn't have access to it initially. And you're scratching an itch, and ultimately, that's what it is. But look, I know that you obviously you've set up that particular Instagram page. You've got your standard property Instagram page as well. I was going to sort of say, I don't know if you're doing it on the FBA side or if it's just on the property side, but also I know on the property side you do offer a service in terms of actually helping investors find or you find properties for investors, and you also negotiate the contracts with the likes of Serco and other housing associations. So in terms of people that want to come and work with you either on that side or maybe even learn from you on the FBA side, what are the best ways of people sort of getting in touch to learn more and figure out how to work with you, Jack?
Yeah, so I mean, certainly not the Amazon stuff yet. That's if you do want to learn, though, the guy that taught me is also another Jack's Amazon Club. He's the 21-year-old, so head over and check him out. His courses are awesome. So if you do want to learn that and you want a little bit of an extra side income, then it's definitely the way to go. In terms of property, I was educating, mentoring, and all that stuff, and I realised that I was kind of railroaded into that model, really, which most people seem to get railroaded into. It seems like the obvious thing to do, and then I realised how much I hated it when I quit. So, so it's simply, we just work with investors who have money and they want to do either they want to help people and they want to invest in social housing because they want to do good with their money. Or we help people because they get great returns. So we can help find acquisitions. It's become very difficult all of a sudden this year to find the returns. We were always around 20% ROI with our deals that we found investors. That's based on rent alone. That's ignoring any refinance. But it's become really hard because the market's just crazy at the moment. So we're sort of focused on the rent-to-rent side of it. We've got a new provider who help the homeless, and they pay really good rates in the areas that we already operate in, and therefore we can get a good amount of rent-to-rent deals. And the ROIs that we offer investors are 50%, which is over a 5-year term. And with rent-to-rent, it's obviously a lot less in. So we sort of created a product whereby you can invest $5,000. Or as much as 17.5 to 20.
Cool. So I mean, just because I find this sort of stuff quite fascinating. Let's say someone that's listening to this does have $5,000. They're like, right, you know what? Let's start using this to create another income for myself. They reach out to you, Jack. What money could they be making per month if they were chucking $5,000 in with you to start this process essentially?
$5,000 will make you 200 quid a month for 5 years.
That's nuts.
Yeah. So like, it's very simple as well. We kind of standardize the amounts based on the averages that we deal with. Some we're going to lose out on, some we'll do better on. But we kind of built it. So your $5,000 isn't going to get you a rent to rent deal, but it will get you half of one. So what we do with investors, just to make it more accessible for those who have less money, is we kind of split some deals in half, and we'll just go and say to somebody, if you've only got $5,000, that's cool. We'll find someone else who has 5. You don't need to worry about it. We'll give you the money every month, but we'll go and find the other half of that and we'll connect them together, which has worked really well. And yeah, I mean, I sold my house, my family home. I've sold my portfolio. Every penny that I have is into social housing, rent to rent right now. So like whenever I speak to investors, it's like, don't worry, we're in it with you here. I have literally my life savings are into this strategy. And the idea for us, which again, people can use us to have the same outcome. But the initial idea was, I'm going to sell my house, use all the equity to buy properties and rent them out to social housing. But actually what we've decided to do because of the returns on rent to rent, they're quicker, they're bigger, is we've put all of our money in there, spent a year doing it, and now we've created a cash flow machine. So we are looking at probably buying 1 or 2 properties from the income from the rent to rents this year. By the time we've finished and reinvested, we'll be looking at buying 1 a month as of next year, and probably for the next 5 years after that. So rather than spunking all of our deposit into 2 properties that we buy, we put it into a business, which is a rent to social housing business, which then provides a constant monthly that then allows us to buy consistently.
Amazing. It's just I'm loving hearing this, because it's just that structure that you've created of, I know where I want to end up, and I'm reverse engineering it back to something that I can actually do now with relatively little financial input that can grow and snowball, that can take me on from stage to stage to stage. And yeah, mate, that's impressive, and it's really, really cool as well. I'm happy that you've found this, because yeah, as you said, you've been getting a bit disillusioned with property, but this is sort of, I guess, reawoken your interest just to a certain degree.
I wouldn't say that. I'd say that I'm now like, I don't want anything to do with anything else.
fair enough.
Yeah, I mean, it's nice as well. People have this sort of like, you know, I want to earn $2,000 a month, and like for us, it's like, well, that's 3 of our top deals at 17 grand, and that's you done. So we've had people literally last week buy 3 deals straight up, and then so we pay within 75 days of that money hitting the account. So within 75 days, they're making their $2,000 a month. It's crazy. And again, going back to the whole like helping people, like I've got to a point now, I suppose, as a lucky, where the money's less important than the sort of impact you have on people's lives. And not only are we doing that by housing people, we're doing that by offering a service. We can't keep doing these. I haven't got any more houses to sell, so we can't keep investing in these rent to rent deals. So if it means that you know, people are investing, some people have been investing for their family or their parents, for instance. So they'll chuck a bit of their parents' money in, and they'll get this monthly return that just takes the pressure off. And it's like, it's so nice to, and you know, it sounds a bit over the top, but it can change people's lives, those sorts of returns. So it's pretty cool.
Yeah, no, I completely agree. Very commendable, mate. But a nice thing to end the podcast on. And I'll just say that, Jack, for anyone that wants to reach out to you, I will make sure that I drop all of your contact details, etc., in the notes on the podcast. If you're listening, if you're watching on YouTube, it will be down in the description below as well. I just want to say, Jack, a massive thanks for coming on and sharing your knowledge on a very, very exciting and quite niche subject. So thanks so much for coming on, mate.
No problem at all. Enjoyed it.
Yeah, cool. I will catch up with you very soon, I'm sure.
Cheers, mate. Speak to you soon.
Cheers, buddy.